Hi, Ron. It's Stuart here again. Hope you can hear me loud and clear. All looks okay at my end. Let me just double check. I've been away for a week or so anything could go wrong with the tech. It was fine earlier. Yeah, webcam looks fine. The audio looks nice and loud and clear. Welcome everyone. Today, let me just put me back up a wee bit larger. Today, what we've been asked to do is do a live breakdown session, live trading session. Happy to do that, obviously. And anything you guys want me to have a look at when it comes to assets or anything at all about trading, whether it's about the prop trade, where it's about futures, CFDs, my view on the economies or different economies of the world or whatever it is, please let me know. Stick it in the chat box and we'll answer them as they come through today. Obviously, last time we went on for quite a long time and I overrun. So I'm going to be a maximum of 60 minutes today. So make the most of it. It's Friday. It's there's still a full trading week of May to go. Anything could happen. Obviously, I've been away from the charts for the best part of 2 weeks, 10 days. 9 full trading days. So I haven't looked at anything. I had a quick browse this morning, and I've got. Let's just start with this one here. This is Bitcoin. If I just make myself a wee bit smaller. Here, and I'll go through some strategies, some setups as well today if people are interested in that. If not, obviously I'm here for you today, but really as we said in the previous 2 sessions that we've hosted along with our colleagues from TPP, that the key to success in trading is really that it's the soft skills, it's the psychology, it's understanding yourself, principally trading a time frame that fits your mentality and your psychology, understanding the principles of risk management and then applying them. And then obviously the nuances around money management as well, being strict about when to get out. When your stop loss is hit, just accepting it that you've lost a trade, so be it, on to the next one. And have a system and a strategy that I say that fits your personality more than anything, but also that you can cope with the drawdowns when you get the inevitable losses. Here, obviously, as a trend following trader, Bitcoin has been above this key line here, and I'll come into the ones I talk about in a minute, the actual setups for the strategies. Above this red line here, if you can see this, hopefully you can see this, yeah, the big red line here. This is my key indicator. If I took everything else off this chart, that would be the one I would use. I'd be looking to go long when the price is above it and short when the price is below it. In very, very crude terms. Obviously, there's more to it than that, but very, very crude terms. There's a couple of reasons I brought this up today. This is Bitcoin. Obviously, we've gone to all-time highs yesterday, and while I was away, it's a big old rally here on the big old candle here on the 8th as we smashed through 100,000. No looking back, big strong wide body candle, similar to the one we had here. We went through the key 92,000 here at the end of April, 22nd of April. Then we consolidated for quite a while, but it was still biased to the upside. We're still way above the 20-day moving average. So this strategy has been long. It was added to, would have been the initial breakout was down here. Again, consolidation, big breakout, added to it here, consolidation, added to it here, consolidation, added to it here on the big candles. And again, it's easy to look at that looking backwards. Good afternoon, guys. Marco, how are we? Giveaways, it's always giveaways. Try using the code at the bottom down here, guys. You want another account, coupon is SC25. That gets you a 25% discount off our already very, very competitively priced challenges, Marco. So do join me. I say, Marco, if you've got a particular asset you want to have a look at, a particular strategy, a particular way of trading, let me know. Okay. So thank you, Mrs. Moderator. Yeah, giveaway in terms of is the knowledge bombs. Yeah, knowledge bombs. Okay, I like that phrase, knowledge bombs. I'll leave that one on for a while. Marco, just yeah. Again, my friend, this is the daily chart for the Bitcoin chart. The reason I say that the reason I've started with Bitcoin is obviously it's got to a new all-time high. The trend's been with us as well. But I haven't looked at this chart since the 8th of, when was it? It was the 9th, wasn't it? Friday the 9th we went away. Went away on holiday on the Monday the 12th. So I haven't really looked at it, but it's been trending. It was up. How would I have stayed in this trade if I had it open? Well, I would have had my stop loss around the consolidation zones. You can see it's very clear steps here, as far, even with something as volatile as Bitcoin. So currently, if I was still trading this, I would have added here significantly. I would have added here. I would have added here as well as breakout. And currently, my stop loss will be around about this level, and it just so happens to coincide. Can you see how it's coinciding? Let me just get rid of that. Just get rid of the markets panel for a minute. Get rid of, I don't want the trade panel in a minute. You can see here, this is this zone here. So on an end of day basis, my stop loss would be all the way down there, just below, happens to be just below this this red line here, which happens to be one of my most favorite indicators, the 21-day moving average. So I'll be comfortable. That's where my stop loss would be on an end of day basis. So again, if that was the 18th, I wouldn't have taken that because I was on holiday. The last entry I would have had would have been here on the 8th, on that Thursday when it broke through, and then my stop loss would have been down here. So I'd have come back yesterday. I'd have probably pulled my stop loss up to this level. I might have even been a bit aggressive last night and pulled it up to here, to 107,000, or here, just below the 2-day. But it's too close, so we'd have been here, round about here. So my stop loss would be there. 102,625. It's below the 20-day moving average. The trend has been positive. The 20-day moving average has supported us. And as a trend following trader, that's all I can ask for. The trend is with me. We're on the up, and I'm just trailing up and locking in my profits. So I would have got in here, as I said, the 22nd. I'd have added to it significantly here. Coming back yesterday, looking at the charts again, I thought, oh, I missed that one. But then, would I have then aggressively added yesterday? Probably not, because, a bit chilled out. We've gone through an all-time high. We're likely to go back and test the all-time high, but the trend is very much with us. So I'm happy to have had that position on with a stop loss there at 100 and, where we say 102,700, wasn't it? Just below the 21-day EMA. And then see what happens. If it turns back and stops me out, so what? I don't care, because I've had a nice old run here from this latter part of April, and that's my mentality. That's my approach as a trend following trader on the higher time frames. Okay, give me some tips or good information so I can follow that. Well, basically, it's Mark. Watch the other two webinars from a couple of weeks ago about risk management and money management, and more importantly, the one from the 9th of May, where we talked about psychology of trading. Because that's the key. You've got to find something that works for you. If this is too high a time frame for you guys, you haven't either, you want to look more, you want to trade more, you've got to still apply the same approach to trading regardless of the time frame you're trading. But if you want some more action, obviously you come down a time frame. So what do we do when we lower down the time frame? Well, we look at what the higher time frames are doing. So here, let's go up a step. Most traders, the highest we've got here on the Trade Locker is the monthly chart. So what is the monthly chart on Bitcoin telling us? And I'm sure most of you will know that we're long. It's had a big shakeout, and we had a very, very strong April, and we're having a cracking May. We got back to all-time highs from the one that we saw back in January on Inauguration Day, as I put here, Inauguration Day, Trump's Inauguration Day. So we had a bit of a panic and shakeout in February. We couldn't go under 75,000. 75,000 held as a nice support area, 78, 77,000 all right to there, and we've been up in April, and we're at significantly higher in May. So here on the the monthly time frame is higher. The weekly time frame is clearly higher. There's that low we got to at the end of March, beginning of April, and we've now had 1, 2, 3, 4, 5, 6 into our 7th, and the week's about to finish, isn't it? Today, tomorrow, so you can trade crypto 7 days a week, but we've had 7 consecutive positive weeks. That's a good run. It's not going to last forever. We will have a pullback eventually, probably, as we've just got to this new all-time high again. You know, some buyers down here will be thinking that's enough for me for now for this leg. We'll see what happens. And then, you know, you can either trade this technically, look at this range now, for the Fibonacci levels, or retrace, or your W patterns, your impulse and reaction legs. You know, trade it how you will, but the monthly chart is up, the weekly chart is up, and our daily chart is also up. So we are still positive. So as I say, even, you know, if I'd put that trade on that Thursday before I'd gone away, walked away from the charts 2 weeks quite comfortable, knowing where my stop loss was, knowing that my stop loss is only going to lose 1 or 2% if it gets hit. Thanks very much, and I can have an enjoyable holiday, not sit and worry about what's going on in the charts, and just switch off and come back 10 days later and see what's going on. So that's the approach. Right, so Emil's actually asked about some actual charts. So we'll have a look at this, Emil, for you as well. Well, actually, let me just ask Moose's question here. Moose is saying, how early do you expect to pull back on Bitcoin? Well, it's reacted today clearly on the break through the all-time high. We got through to the all-time high here on Wednesday. Thursday we pushed higher, but it was a smaller candle than we'd had on the day we went through the all-time high. It was smaller than the last big leg up here on the 18th. Remember, that was the one I would have looked at looking back. And then we'd had all this consolidation. It was about the same size as this follow through on the big move up here we'd had on the 8th. So you can see this can't start. So it's not a surprise that we've perhaps pulled back a wee bit today. But again, depending on when you've got in on this, where your stop loss is, the pullback could quite come easily. I mean, obviously with Bitcoin, Musa, and all other assets, particularly Bitcoin, you know, the volatility can increase, and we could easily pull back all the way here. However, the other technical thing that's happened this week as well, we've had the blue line, this blue line here, crossing the orange line. Why is that significant? Well, this is what we call a golden cross in technical analysis terms. It's the 50-day, this blue line, the 50-day moving average, crossing from below to above the orange line, which is the 200-day moving average. These happen to be exponential moving average. It doesn't really matter whether it's simple or moving. In fact, no, they're both simple moving averages. You can see there in the corner, both simple moving averages. So that is the key technical cross, which happened yesterday as we went through the all-time high. So again, no particular surprise that we've pulled back a wee bit. But again, for me, you know, if it pulls all the way back to the 21-day moving average, I'll be out. My stop loss would have been hit, and I'll be, you know, waiting for the next leg, whether it's going up or going down. And Musa, I don't care, because I'm a trader. I'm not buying this and holding this. You know, I'm not psychologically attached to it going up. You know, I'm not dived into it actually going up in price. I would be if I was long, but you know, as a trader, you're in and out. You've got to be able to manage those emotions. So the pullback is happening today, but it just might be just a one-off day, simply because we got to a new all-time high. Look what happened last time. We had a nice rally. It petered out for 3 days, and then we didn't do much, and then we went up again. Then we went down for 2 days. Then we up again, but really not much movement here during that the second and third week of April before this move up here on the 8th of May. Just before I went away a couple of weeks ago. Then we've had, well, I've been away basically, not a lot going on. The 18th was an interesting one because we pushed to new recent highs, tried to test lows here the immediate day after, wasn't having it. Big long wick. Although we finished low, we went higher again the day after, and then we broke to and actually beat the all-time high. Wasn't a massive breach, which is why we ran out of steam the following day yesterday and then moved down. Okay. And most of the cross is a significant cross because it's called the golden cross because it's a 50-day moving average crossing the 200-day moving average. And that means the average price over the last 50 days has crossed above the average price of the last 200 days. And remember, 200 trading days is, you know, you can count back, that's most of a year. So this is the yearly average, if you like. This orange line here on this daily chart, Amusa and everybody else, this is the average annual daily yearly price, if you like, this orange line here. So you can see here here through October all the way to March this year, we were above the annual average price, the 200-day moving average. We dipped under it here for a month or two. Now we got back over it here on the 22nd of April, that day we talked about earlier, over the orange line, and we've been over the orange line ever since from a price point of view. We've also been over the 50 line. Okay, what's happening now though is even more significant, because the blue line, the 50-day average, has been below the 200-day average. So the last 50-day average price has been below the average 200-day price for since the beginning of April. Now, as we move into the end of May, into June and the summer months, the 50-day price, the average, is above the 200-day price. So these moving averages now, the red line, the blue line, and the orange line, now are all aligned. What does that mean when I say aligned? Well, they're in order. So that's good, isn't it? Order is good. We've got a strong trend, because we've got the 200, the 50, and the 20 all in order. The green line is the 9-daily average, and the orange line is the fastest moving average, the slowest, it's closest to the price action, is the 5-period moving average. So these are all now in a line. So we've had a big move up. Just like here, when the blue line went under the orange line here, we moved down, but it wasn't for very long, was it? We moved down for 2 days, but it took a while before it went back up over the orange line. So these are long-term averages, okay? So these are long-term when we look at the daily time frame. But you can use the same moving averages, Musa, on shorter time frames. So if we use the same setup on the chart, these 50, 200, and 20, the red, the orange, and the blue. If we go back to like the hourly chart, you still see the same moving average. So this is the 200-hour moving average now. You see it's above that. We've had a big sell-off today, this morning. So this had been positive here, above the blue and the red line, into the 50-hour moving average here on the on Wednesday. As we came down, but we moved up again, and there's that. These are all-time high here. This blue line, this 109,400 on. And so here you can see for a few hours we were over it, but as you can see here, we consolidated at highs. You can see that. Hopefully you can see that. Let me just put on the. Can't see the corner of that. Let me just put on the order panel again. Not that one. The trades panel. Let's get rid of the order panel. Hopefully there you can see just behind our low. You can see how we're sort of consolidating. Then today, this hour, this morning, 12 o'clock, it's had a big sell-off. So here on an intraday basis, on an hourly time frame, that would have triggered short, because it's gone under this 20-day moving average and the 50-day moving average, and you've taken a short trade down on the hourly time frame at 108,989 this morning. It's actually come back to it. We didn't come down here, but your stop loss would be up here through this all-time high here on the hourly chart. So depending on the time frame, my friends. So please let us know what is the cross. So that's the significance of the cross move. So if you want more on technical analysis, have a look on our website and have a look on some of the blogs that we've put on technical analysis, moving averages. The one the simplest to understand, and they're great when the market is trending, when the market is moving in one direction, whether it's moving up or moving down. So here, again, it's all about time frame. So again, we've had a sell-off today, but the daily time frame here for Bitcoin remains very positive, but we have had a down day. And if you're trading this intraday, you should really, the bias today is to the downside, because we've had that joint top. There's a bit of a potential tweezer top forming there, very short tweezer top forming there, potential on Bitcoin. But again, we can't make a decision on this time frame because the day isn't concluded. We can't make a decision on that candle because the day isn't concluded. If we go down to the 4-hour time frame, the last completed candle was this one here, at 2 o'clock, and 30 minutes before we came live here, and that was right into the 20-day, and it's also it's looking like it wants to go short, but it hasn't broken through here on this particular strategy. Okay, this setup here using the short time local time frames, you need to have a cross of the 3 moving averages. So the orange line and the green line need to cross one or another. You see here at this candle there, the orange line crossed from above to below the green line. So that's a potential trade, short trade. The second trigger is the candle then needs to break the 21 EMA. So we've got a cross of the 5 and the 9 exponential moving averages, but then we needed to make a break of the 21 moving average, a bit like we had here. It was supported, it went up and went down, it went up again, and but didn't go anywhere. So it hasn't, it's non-trade basically. Looks to go short there. It didn't happen. We've stopped out. It's gone back up there. Or stopped out here at this point, and that would have been potential long position because it crossed here again. That was closing out your short from here, and you'd have been long from here. Stop loss would have been down here initially. You might have added on that candle there, that 4-hour candle there. You see how it's a big candle, big bodied candle. So you've added there, stop loss here. You might have actually been stopped out if you got your stop loss too close on that volatility there. If you hadn't left the stop loss back here, moved up and moved up. On the conclusion of this candle, probably the stop loss might have been at the top of this candle or even here. But it's stopped out as it's run out of energy as it's gone under here. So that would have stopped you out at the all-time high. So, and that's looking to go short now. So the 4-hour hasn't yet triggered to go short. As we can see on the 1-hour, the 1-hour is already triggered, as you might expect. So there's the short position on the 1-hour time frame. The stop loss would be up here on this strategy here on the 1-hour time frame. And the daily time frame is still long, because we were long here, and our stop loss is, as we said earlier, down around this level here, or even this level. Sorry, we said this level here, didn't we? Just below the 20-day moving average. So depending on the time frame, again, on what you want to trade. Okay, Musa, have you got it? Good. Okay, that's not a problem. Somebody was asking about some forex crosses before. Amula, any particular time frame? If not, we'll go through that. We'll go through them all. Okay, so let's just go through. Let's start with the daily time frame for both cable and the euro. Well, before I went away, I knew the dollar was under pressure. The euro and the dollar, the bias to the upside was long on the daily time, and I don't think that's changed very much, if at all, since I've been away. So let's just have a look at. Let's have a look at that. Let's have a look at the traders panel. So we want to look at the pro crosses. Sorry, the majors, forex majors. Let's start with the euro. For you, Amusa. So euro, what's going on the daily time frame? Okay, well, what is this telling me now? What can I see here? Well, this is the daily time frame. It's biased to the upside. If we go up a time frame, the weekly is clearly had been biased. It's had actually a recall for 1, 2, 3, 4 weeks down, but this week has bounced quite significantly. So that's quite a significant candle. Obviously, the week isn't over yet, still a few hours to go, but that's a very big bounce. So clearly, there's been support here at 111.87 whilst I've been away. So that's a clear support area here. Let me just move that down there. So that area there on the weekly time frame is clearly where we closed last Friday. And opened on Monday, and we've been above that ever since. During the week, last week when I was away, we went all the way down here to 110.65. So that's worth putting on as well, because it's new for me, because I've been away. It wasn't a price that was played out before, but I'm going to put that on there. I'm going to change the dots. So this is a weekly. This is the low, if you like, of the euro dollar whilst I've been away from the chart. So we were down the week. I was still trading. It was completing down. Looked like it was going to go short. But as you can see here again, here on the weekly, the moving averages are still aligned to the upside. We haven't had a cross, so it's still positive here from the 3rd of March, euro dollar. So we're still supported by the 9-period moving average here on the weekly chart, and that's you can see the week I was away, the week I was still trading here. That's the 2nd week of May. There's that 111.80 area. The 111.90 area, let's call it 111.90 for sake of round numbers. So 111.90 is the 3-week support zone. So that's a weekly support area, and we've rallied off that significantly this week. and we're currently trading at 113.20, some 140, 140 points above that key support weekly area. Moving average is still positive. We're looking again, see how this 50 period moving average is looking to cross the 200 period here up on the weekly chart frame. So the weekly has turned around because it's got a big engulfing. So it's probably turning positive the weekly from being negative. So it's been negative for 4 weeks. We've had a turnaround this week. The daily will be more positive than the weekly, obviously. So there's that decline from last week, and this is the rally from last week as well. So that's that low area. That's that 111. Sorry, the one is that 112, 111, 111 area we put in at the end of the week. The 111. Sorry, the 111.90, our weekly support area. And as you can see, what happened during the day was that first Monday I was away, Monday the 12th, we went in to test the 50-day moving average down on the Monday. It provided support, and then we've moved off it. So there's that dotted line. Remember the dotted line we put in on the weekly chart? That's our 50-day moving average on a daily basis. And that now has gone from 110.60 this week up to 111.50. I'm saying this week, in the 2 weeks I've been away. So that was the 12th of May when I last looked at this chart. Would have been here on the Friday, the 9th. It just gone under the 20-day moving average on the Thursday. So that may have triggered, or would have triggered on this strategy, would have triggered a short position here on the Thursday the 8th. It then moved lower into the 50-day moving average. Looked like it was going to go at the close of this day on that Monday the 12th. If I had looked at that again, I would have been really happy because I'd have been short here on the Thursday. Lots of pips in the bag here on Monday. Looks like we tested the 50-day. 50-day may have held. Would it held? We don't know. But let's look back what happened last time. Look, it held last time as well. It held here last time as a resistance going up, and then it finally broke. So I might have been short still there, waiting for this to break. But my stop loss would have been initially up here, would have pulled it down, would have been around about here. So that short position here would have actually ended up closing out negative, not negatively, but flat, because it had turned around and gone back over the 20-day moving average here on the 19th. And then here on Wednesday, it triggered long here on the 20th. Can you see all that? I hope you can see all that. Yeah, you can see. I hope you can see all that. So that's long. So this remains long, Amula here, the euro on the daily basis. But look what's happening. We rallied. We went long here on the 20th. Yesterday, sorry, not yesterday, Wednesday, it moved higher again into 113.40 zone. But look where that is. Look what it is. It's a resistance area, isn't it? There's some sort of pivoting areas. It's just a sticky area, isn't it? You can see how it's congested here. Hasn't moved up. It took a while to get through here. Did it for one day, gapped high, but then came back down really quickly. So this is where it's comfortable. It doesn't want. It needs to break above this level. This level it got to on Wednesday significantly. You know, it's long, because it's above the 20-day moving average and the 50-day moving average, but it's not really trending. There's not much emphasis with it from the candle pattern. So although it's biased to the upside, it's not really trending. It's a bit of a mess, isn't it? It went short for a couple of days, went long, and then it sort of died out. So it's not really something to get too excited about, the euro dollar, from a candlestick perspective. What are the other indicators telling us? Well, the RSI is at 56, which is pretty neutral. The MACD and the signal line in the MACD here on the MACD have been actually short here on this daily time frame. They look like they may be looking to try and cross and move positive. The histogram has been negative. It's not as negative as it was. It's sort of turned up, as you can see here. So that positive trigger there, that long trade there on Wednesday. Tuesday is sort of okay. It probably made 30 or 40 pips initially, but then it's come back. But if your stop loss is sort of down here at the 50-day moving average, you're probably still long that. But it's something you might want to close out of the weekend and have a look again for Monday. So what I'm seeing here from what's happened to the euro in the 2 weeks I've been away, it's tried to move lower and it's recovered it basically. So we're sort of back where we were. So if I went away here, the 7th or the 8th was the last time, it looked like it was moving lower. Didn't really moved much lower, and it hasn't moved much higher. So it's more or less where we were. And this is the key. That's what that chart is telling me now for the euro dollar. 113.15 is a key pivot area. You see how it's rotating through this zone here. So we need to break away from this zone. The area I'd like to see it break above on an end of day basis will be above 115 and holding it, which we couldn't before. See how we went to 115 and gapped up. Gap was immediately filled to the downside, so that's pressure to the downside. But if we're going to break down, we've got to break under the 50-day moving average, which is at 111.50. So 111.50 is the big support area. 115 is the big upside break area for euro. In between that, we're going to trade that range. Okay, that's what that's telling me. Amula from being away for 2 weeks. Again, I don't know if that's your time frame, my friend, but so daily's long, it's sort of petered out. If we come down to time frames again, the 4 hour was long. See how the support is exaggerated here on the 4 hour time frame. We just had one candle on the daily. Here we've got the 20 and the 200 period moving average providing support. 50's all the way down there, so it's a bit of support. You can see how it's pushed up and then gone down. Lots of volatility here, and then the 1 hour will be even more volatile. So it's rallied up and down, up higher. Much volatility here this morning. Obviously today, again, I haven't really been following the news, but I saw earlier that Trump has announced 50% tariffs on the, or 50, I haven't been really plugged into the news, but something about 50% tariffs are likely on the EU. So that's obviously created this massive volatility here on the 12 o'clock candle here, where we went to 113.75 and all the way down to 112.98. So again, 113 is the big support area today for euro, and the 50 and the 20-day moving average has support at 113.15. So that's your support area. Okay, so basically euro in the up is a bit biased to the upside, but not to something to get too excited about. The 4 hour remains sort of biased to the upside with support through here at 112.35, and the 1 hour time frame, because of the news, much more volatile. So we've been short, then we were long, then we were short, and it's just not doing anything at the moment. So again, nothing to really move this. So keep your tinder dry. Wait for some more news next week. Final week of the month, probably a bit more exciting. We got PCE next week. London is closed on Monday. It's the late spring bank holiday on Monday in London. And London is the centre of the forex market still, so the liquidity will be much lower on Monday. So be careful if you're trading this on Monday. So as far as euro is concerned, a bit negative. Also positive, but nothing to get too excited about. Cable, or the pound against the dollar. Again, let's go at the daily time frame. Interestingly, had a great day today. That key 135 level was breached earlier today. We've had a 1, 2, 3, 4, 5 consecutive day rally, and again another one here whilst I was away. It looked like this was the top trend line we put in the week before last when I was away. This is the 6th, 7th, and 8th. Another one that looked like it may be going short here on the Thursday. It bounced on the Friday, and then that Monday looked like we were going down quite significantly, but instantly it was bought back. So the big support area is 113.78 here for cable. The 20-day moving average sits sitting here at 132.40 or 132.40 area, where this purple line is here. And again, it moved higher here on the 19th. That was a big breakout, even though the initial short was here, reversed long here on the 13th, and that's still long here on the daily. So the cable remains positive and long, but again, a lot of positions would have been taken off, given that we got to 135, which is a hugely psychological number for cable traders, and also the fact that it's Friday and Monday's closes the market as well. So understandably, profit was taken off the table earlier on today, but we are still bid, and we're still above both the 5, the 9, and the 21 moving average. So this is still long. Stop loss, I'd have it round about here now, just to be comfortable. Maybe pull it up later on today. We'll see what happens. But that's the key area here. This previous high from the 28th of April, which is above where we are currently today. So stop loss, comfortably back here. But get it, trap some of this profit on that move up here around about that 134 area for cable to the upside. MACD and signal line crossing this week as well. That's positive. We've gone from purple to green, pink to green. So Musa, cable is much more positive, or the pound US dollar is much more positive than euro on the higher time frame. So that's long on the daily time frame. We are also that's weekly. Let's check the weekly as well. So again, so for consolidation for a best part of a month, up to 134.40. We went down to 130 in that 4-week strategy, and then a massive positive week for cable, week for dollar again as we've gone to 135. So again, end of week, big support through there. What's that? 132.65 on an end of week basis, big positive week. So that remains positive. As you can see here, if we got to the monthly, a positive 4 or 5 months for cable as well. So big move down, big recovery into that key 135 area. So can we hold it is the key thing, or can we breach it here into the end of the month next week? We shall see. Obviously been a key area here back in 22 and 21 for cable 135. So we haven't been up here. So this is highs not seen since February 2022 for sterling. Things looking up for sterling over the last 3 or 4 months, as you can see here clearly on this chart here. So coming back to our trading time frame, so the daily, as we said, was positive. Sorry, daily is positive, and we got to the key 135. So all the other time frames below that, we buy to the upside. So we'll be looking to buy rather than sell. So again, 4-hour positive as the big shakeout, and the 1 hour would have actually rolled over. Not get too greedy. Take your profits off at 135. Big old shakeout there at after lunch. Unsurprisingly, after lunch on Friday, before the long weekend here in London, we did get as high as 135.32 this morning. But the big shakeout, everybody's come back from lunch. I've gone off for the weekend already, and we've sold sterling at that 135 level, and we're currently trading 134.95. So it's still bid, very much so. 20-hour moving averages here, 34.65. You wanted to hold that into the weekend and over the weekend. That's where my stop loss would be, 134.65, and bid. And again, it's a fairly healthy stop loss, given that the previous high was through there at 134.45, below the 134.50 area, and above this blowout opening to the European trade this morning on the 7 and 8 o'clock candles. We moved higher. So have your stop loss around about there, locking in any profits from today, 134.65. So again, that's buys to the upside. If you're trading this on a shorter time frame, we've rolled over and turned short. So the 5-minute chart will be short. There's the rally up. There's the rally up this afternoon, and now we've been short and down system on a 5-minute. I should have started 15 minutes rather than 5 minutes. There's our move up this afternoon. Flurry of buying over lunchtime, and then we've turned around from that 135.32 area and sold off. So we're moving lower. Stop or support 134.74, or a target to the downside possibly later today for some more selling as the US markets have opened. Mark, yes, you're right. Psychology and risk management key to success. You're absolutely right, and it's just a matter of applying it and not forgetting about it every day. And when you're looking at these sort of charts as well, always bear in mind that if you do lose, or when you lose, it's only going to be small. It's not going to affect you from an accounts point of view. If you're sort of risking 5 or 6 or 7% of your account, that's too much, guys. It's gambling. We don't like you risking more than 3% of your account on any one particular trade more than a few times. So keep the consistency rule, not the consistency rule, but keep this idea of trying to be a consistent trader, doing the same thing day in, day out on a strategy and a time frame that fits your personality. That's when you start become successful. That's when you find out most about yourself. Try and keep things on an even balance. Don't get too excited when you're losing, when you're winning. Don't get too depressed when you start losing. So it's all about you as ever. So the upshot is really, have a system that works for you. If you're looking for a system or looking for a setup, there's thousands of them, hundreds of them. I got quite a few here. This is my default one, the crossing EMA strategies. We've got lots of different layouts on here. So this is the one I use normally. This white background, the exponential moving average cross for the 5, the 9, and the 21. This is quite a nice one. It's just used two simple indicators, the MACD and the stop and reverse, the parabolic stop and reverse. So we're looking for a cross of the MACD lines and a flip of the parabolic SAR buttons. And again, it can be applied to all sorts of different time frames, but it's principally a trend following strategy again. So here we are with cable again on the 1 hour time frame. So you're looking for a cross of the orange and the blue line here on the MACD first, and then see what's happened to the parabolic SAR. So here it's a bit whiffy. It went long there, but the parabolic SAR had already flipped, so we'd gone long at that point, but then it turned around quite quickly, didn't it? Because we crossed here again. The parabolic SAR hasn't flipped yet, so we're not short, and we've gone short there. So there you go. It hasn't worked out because it's gone short right at the it was long there and it's flipped short there. That hasn't worked out. It's gone down, 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 down. Next cross was here. Parabolic SAR has already flipped from above to below, so we're looking to go long. But the as you can see, the MACD lines are flat here, and eventually the blue line moves above and away from the orange line on that. Nope, that candle there, right on there this morning at or the last night's candle. So really 1 o'clock would have been our entry. So that would have gone long here this morning at 134.33, this strategy. And you stay long, 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 long. It was still long there and it flipped there. So we'd have got out there at 134.82, having gotten here at 134.23. So whatever that is, 50 odd pips there this morning, today on the cable. And then that's on this hourly time frame, that's still nothing's happening at the moment. It's waiting for a time frame. So that's the MACD and the SAR. So this one, you're looking for a cross of the MACD lines. Sorry, the MACD line and the signal line, the orange and the blue line here. Sorry, the orange and the blue line, yes, here. And then the flip of the parabolic SAR blobs. Remember, when the parabolic SAR indicator is below the price action, that's positive for a trend to the upside. And when it's below it, when it's above it, you're looking to go short. But the first rule for this strategy is you're waiting for a cross of the moving average, the cross of the signal line first before, and then see what the parabolic SAR has done. So here, all the way back here on the 19th, that had already flipped the hour before, but the parabolic SAR didn't cross till the short. So that would have been long there. And you stay in, stay in, stay in, stay in. Again, see how it's flipped, obviously giving you a lot of the profit back, but you'd have got out there. So you'd have got in here and out there. That would have gone short at that point. There, you can see the MACD has crossed, the parabolic SAR is already above, but that one hasn't worked out, has it? We've got short here at this point here, 133.98, and the market has moved against us. So here it's moved up to go long here. And again, it's not gone. The parabolic SAR didn't flip till the following candle, so we got long there right at the top again, and then it's flipped around and stopped us out. Our stop loss will be down here somewhere, 2 or 3 candles behind where we got in, and it stopped us out. So that one hasn't worked. That one's gone short, but this is still long, so we haven't triggered short until that one. So that's another fail. So we have 3 failed trades there until we get this nice move from here. So we get a big positive payback of these 3 failed trades we've had here. So overall, probably in the money there on cable on that 1 hour time frame. So that's the MACD and the signal line strategy. This is another one. I like the Heikin Ashi candles. This is Heikin Ashi candles. Heikin Ashi candles. Again, it's full webinar on Heikin Ashi candles. They're average candles. They're great for taking the noise out of the market. So what's this telling me? Well, this has been long, basically all day today, basically, and it's just turned short now because it's gone from green. Some very positive candles here at 9 o'clock, 10 o'clock, 11 o'clock. Got a bit squiffy at 12 o'clock, which stayed green. Got even more squiffy at 1 o'clock, and then the body of the candle shrunk again, and now it's turned red. So I've got out of that long trade from down here yesterday. So that's you know, in at 134, sort of round about there, 134.20, and out up here at 134.95. Just as it, again, I'd probably take that out as it went through 135 positive. So it's a positive setup. The beauty of Heikin Ashi candles, as I say, it takes a lot of the noise away. What you're looking for are big bodied candles with no wicks to either the top or the bottom. When there's no wick to the south, to the underneath, that's positive for an uptrend. No wicks to the top, the north, that's positive for a downtrend. Big bodied candles are positive as well. The bigger the candle, the body of the candle, more significant the move. The downside of Heikin Ashi candles is they are average candles, so the price action can be quite a long way from the actual trading price. So you can see here the bottom of the candle here is down at the bottom of the spread at the moment. That spread looks quite wide. That spread looks ridiculously wide at the moment. Why that is, there's be a reason for that on that. That doesn't make sense. But that's the Heikin Ashi setup as well. I mean, there's lots of ways. I mean, if you depending on how you want to trade, guys, the other way is this is a mean reverting strategy. This is the Bollinger Bands and stochastics. You know, when we're out of the Bollinger Band looking to come back in, but if it's broken it significantly, like here, again, it's the same. I mean, it's the same asset we've just been looking at. You know, the Heikin Ashi, we were above the midline of the Bollinger Band. So anything above the Bollinger Band midline is positive. Anything below is negative. Sideways action here on the Bollinger Band. You can see we're just going sideways. Nothing's really happening. No action. That was interesting. Looks like we were going to come back down, but we didn't. We kept going. Although, you know, the stochastic here has crossed in this overbought area. But so what, you know, because the trend is still going up. And again, it's the 135 level was the key move to the upside we've had here. We had a squeeze up, down, and a big blowout here. So trending to the upside. So we see this expansion in volatility, and we're cooling, but that remains. You see here remains very positive, even though the stochastics have rolled over and started to move down. So be interesting to see where this finishes today. Cable very positive. So this is a bit of a mean reverting type strategy. So we're looking. This was looking to go short because we were out. We came back. We've gone again. That would have been interestingly, if we look at that, see the cross there. It's been flattened out, and that has moved down since we've had this this price action here. So this, what looks like, oh, that's dipped down quite significantly. That wouldn't have happened until we had these two candles completed. Okay, if we go down the time frame, see how this volatile this would have been today. So we were up here, looking to go short, going long here, up, and it just hasn't continued to move. It's run out of steam really quickly there, hasn't it, on the 15-minute time frame? That was all around the Trump announcements around tariffs on the EU, obviously hitting cable as well. So that's a mean reverting type strategy. So let me just sorry, I hadn't scrolled through the questions here. No, I'm happy to go through anything you want, guys. Right, Michael's asking about what is the risk percent we have to take per trade? Well, it's down to you, my friend. But I would, again, I can't tell you what to do. I'm not allowed to. But my success in the trading has always been admitting when I'm wrong and accepting a losing trade. Let's have a look at something different. Let's have a look at gold. Let's go back to our default setup. Unless guys, you want to look at a different layout or your layout or something, let me know. Sorry, I've lost the questions here. I've got 10 minutes left because I've been here for too long. So Mark, 22. Let's your risk per trade. Right. Let's just do this. Well, let's just use a clean chart for a change, shall we? There we are. There's a clean chart. Okay, there's no lines on this. So one of the key things about the trade locker, guys, and here, can you see that? Oh, you can't see that very well, can you? My head's too big. Hopefully you can. I don't know if you can see that. Can I move it? It won't let me move it, will it? There we are. Can you? Oh, the screen's not looking great, actually. So let me get rid of me. Right, I'm just going to take me off and my ugly mug off for a minute. And so you can just team it. So hopefully I'm going to talk about this bit here, the order panel, to answer Mark's question about percentage trade. The beauty of the trade locker and the setup here we have with the proptrade.com is you can actually set your risk. You can actually set percentage of how much you want to lose, where the stop loss needs to be. So let's assume, can you see the chart still? Yes. Yeah, so we've put in a stop loss here at where the current price is. We don't want it there, do we? Let's say, so we can see that this is moved down, and we want a stop loss around about the 20 period moving now. So let's call it 32.70. So we take this to 32.70. Let's just do this live now. So that is 6% of my 6.6%. Can you see that? Hopefully you can. You can see that 6.6% of my account. My account happens to be it's got an open trade at the moment. It's in profit for $1,500. The balance at the moment is 9,000, just under 9,800. My equity is 11,000. My open equity is 11,200, 300, because it's got my open trade. Obviously, if the trade was losing, it'd be negative. The equity would be less than the balance. Anyway, there's the margin and the margin available. So what it's telling me is because I've put in here 0.08 lots, that's how much I'm going to risk. But I don't. Let's say if I wanted to only trade the minimum amount, which is 0.01, by having my stop loss there, I'm risking $83, $84, a 0.1. Whoops. Me to do that, sorry. So that's the lot size, and that's, I'm going to risk $84, and it's going to be 0.85 of 1% of the risk if the stop loss gets hit on that lot size. The other thing you can do, the beauty of Trade Locker, which is unique to many trading platforms, you can actually put the risk in. So you can tell the system, I actually only want to risk 0.5 of 1%. I still want to risk, whoops, sorry, let's say risk. Let's say we want to risk 1%, sorry, 1%. And I only want to trade the minimum lot, which is 0.01. This is telling me I'm going to risk nearly $97 with my stop loss at 2,700. If I want to increase my risk to 2%, you can see I can now trade 0.2, and I'm risking $195. Okay, so it tells you how much you should be losing, or not to tell you. You can put the stop loss, or find where your stop loss needs to be, which we said was 3,270, and then the system can tell you what lot size you should be risking to make sure you're not risking too much. So before we were only risking 0.85 of 1%, weren't we? Remember, this was telling us when we had one lot. Whoops. Take that off. Sorry. It was 0.1, wasn't it? Well, stop loss 3270. We said we wanted, so it's only 0.18 of 1%. So we could add to that a bit, couldn't we? Could make it 0.2. And it's 1.65%. So that's okay, isn't it? That's sort of, you know, if this trade goes wrong here, if it hits our stop loss at 3,270, we're only going to lose 1.6%. So we only risk 0.2 lots. That's one of the big advantages of the Trade Locker and trading with us here at the proptrade.com, my friend. You can manage your risk very positively, okay? Because that is the key. You've got to make sure when you do lose, you're not losing very much, and you've got to be comfortable with it. So why am I? Let's just get rid of that. So that was why did I put the stop loss there? Because that's technically, you know, where a key moving averages that I use on my system is. It's a wee bit close, I suppose, on this hourly, on this. Sorry, it's not daily time frame. So I'll be quite comfortable with the stop loss around about that 2.7 area or 2.61 or whatever it was there. Really, you know, the turn, the real turn in them, because this is look at the gold market. It's gone up, it's gone down, it's gone up, it's gone down. So really, it was sort of sideways. So really, the big stop loss should really be there, you know, all the way down there, 3,200. So again, I'd want minimum lot size if my stop loss was all the way sort of down here. So I'll put my stop loss, make it 260. You know, the loss gets bigger. But well, let me put the stop loss down there. You can drag it around. It's not wanting it to move down there. So it's a great way of managing your risk. You can actually apply it before you trade it, okay? And get used to doing it. Even if you're trading short term, you're scalping on 5-minute time frame, you can still apply these ways of applying your trade. But always, you know, make sure there's a stop loss in there, and the stop loss level is not going to be too much of your account lost if you lose the trade. And that's what this is telling you every single time. So you've got it there before you open the trade. You know exactly how much you're going to lose if that stop loss gets hit. That should be a real comfort to you. If it's not, that's what you've got to work on, my friends, because that is the trick to successful trading, being comfortable with your losses. Too many people, too many traders get really uptight about losing, and then they end up slipping into gambling by risking, you know, more than 2%. They're risking 3, 5, 10% of their account. It's huge numbers if they win, but more importantly, it's huge numbers when they lose, and that's what the problem is. Okay, whoops. What happened there? Decided to take it off. There we go. Glitch, real time. Mark, thank you very much. Hi guys. Anything you want to have a look at? Let me know. Let me know. Got to wrap this up if you don't mind. I think TV is going to be announced some giveaway with the prop trader. Hopefully that'll be good. Let me know. Vikesh, is a prop trader back? It certainly is, Vikesh. I would say this is today. It's really all just about trading techniques. We'll get back to you all these questions. Vikesh, there we go. Moderators ask you a question. Okay, lots of questions. Right, my hour is up. I need to go. I blahed too long last time. Guys, thanks for your time today. So in essence, we've still got a weak dollar for the markets. Gold is at 3,350. It's ticking up again. Everyone's favorite asset, Bitcoin, is still at relative all-time highs, 109,500. So we're still above that January the 20th. So stay strong, my friends. If you want to join us at the prop trade, please do come and join us. This is our website, theproptrade.com. Our trades, our challenges are here. 25% off for new clients. Click on the evaluation phase, 2 phase or 1 phase to get you to the funded account. You can obviously scale up to a £5 million challenge, for $5 million challenge. And standard challenges are most popular, and the 25,000 one is our most popular here. It's currently $175 for a challenge. If you put in SC25, that gets you a 25% discount off the full price and brings it in at around about $130. Obviously, if you haven't got $130, you know, $10,000 account gets you a $63. Sorry, $10,000 for $63. So do come and join us and see if there's any giveaways with either us or the TPP as well. So thanks for your time, everyone. Actually, I've got a final question. Somebody's asked for another 10 minutes. Of course I have. One last question, Mr. Amel. How long have you been trading for? And then we have to wrap up. Right. I watched one of my webinars. I first started trading and investing in the summer or the autumn of 1997. It was after Princess Diana died, and it's a long personal story for our family. And I'll tell you it one day if we ever meet face to face. Well, I've got time in another webinar. But yeah, it's all about accepting your losing trades is one of my big lessons I learned very early on, and having a system that you trade that fits your style and fits your personality. I'm a trend following guy. I'm looking for to be the right side of a trend, whether it's going up or going down. I don't care, and I don't care what the asset is, whether it's Bitcoin, gold, or the oil market. If it's going in a direction, I will follow that direction until the stop loss gets taken out. Thanks for your time, guys. I'll see you all again next week. Full trading week next week. We got live events every single day next week, so do come and join us. See you then. Have a safe weekend, and may the pips be with you, my friends. All the very best. And let's just finish in my ugly mug. There we are. All the very best, everyone. Have a great weekend and stay safe. Remember, Monday, London is closed, so there'll be perhaps less volatility in the market, less liquidity. So be careful if you're trading the Forex market in particular, but I'll be with you on Monday as normal. So take care, be good, and have a great weekend. All the best, everyone. Bye-bye. Thanks for your time.